Hello and welcome to Position Sizing, my personal views on the market. It's Sunday, September 19, 2010, and before we begin, I caution you to invest at your own risk. I don't share in your profits and I don't share in your losses. Today I want to focus on the volatility index, or as it's referred to, the VIX. The VIX measures the implied volatility in S&P index options. Implied volatility is one of the key components of option pricing, and if you want a better understanding of how volatility works in option pricing, I highly recommend Jeff Ogden's book called The Volatility Edge in Options Trading. The VIX is often referred to as the fear index and reflects the market's expectation of stock market volatility over the next 30 days. Generally, the VIX has an inverse correlation with prices. When the S&P is rising, the VIX falls, and when the S&P is falling, the VIX rises. As you can see in the May time frame here, the VIX skyrocketed when prices were crashing. Which brings us to today's lesson. When the VIX closes below its lower Bollinger Band or Keltner Band, it's a sign that the market is very complacent. As such, a close below the lower Bollinger or Keltner Band serves as an excellent sell warning. If you look at the chart, the VIX closed below both bands on January 11th of this year and made a top on January the 19th. Next, in April, we saw a close below the Bollinger Band on the VIX on April the 12th, and the market topped on April the 26th. Recently, on September the 3rd, we saw another close of the VIX below its lower Bollinger Band, giving us yet another sell warning. What's interesting about the VIX sell warnings is how well they align with another sign of complacency, the AAII Sentiment Survey. The American Association of Individual Investors surveys its members each week to determine if they are bearish, bullish, or neutral about the stock market. What we see is that 3 days after the VIX sell warning in January, the AAII survey hit 47% bulls, which was the high for the year. Again in April, 3 days after the VIX sell warning, we see that the survey hit 48% bulls, another new high for the year. Here this week, the survey hit 51% bulls for yet another new high for the year, 13 days after our VIX sell warning. So the question I have is this: why is everyone so bullish and complacent when we've not even broken through the trading range that's we've seen over the last 4 months? Sounds like a dangerous recipe to me. Are we making another top? Time will tell. Until next time, happy trading.